Ahmed's on the line now, Global Chief Market Analyst and the Vice President of Corporate Development at FXTM, based in Cyprus. But Jameel, back in Dubai, welcome to town.
Thank you very much. It's a pleasure to be back.
So lots of travelling, obviously, in the new year, and I suppose things are starting to ramp up for you. It's that obvious first question. When you arrive in town, everybody asks how long you're here for, when you're leaving, basically.
I do. I tend to pop in and go back out. I'm in Dubai until tomorrow morning when I go back to Cyprus. Mm-hmm. But basically what I was doing was I was in Malaysia late last week. I had an interview with Bloomberg and then a seminar on Saturday, and today and yesterday I've been here for a media tour.
All right, then. Well, look, it's interesting that you're here at this time, actually. We've just had the first month of 2016, a year that there are some issues with for many people. There's some trepidation in the air, of course. Your thoughts to start locally and regionally from a market perspective. What do you think?
I think that there are challenges to the global economy right now, and the major driver is obviously depressed oil prices. Local equities are vulnerable to this, and basically what's happened, and it follows on what we were talking about in our interview last week, is that despite oil managing to recover its momentum last week, we didn't close above $35, which was heavy resistance, and this week we've again reversed our trend, and this is why local equities have started off this week with a little bit more negative momentum.
What about from an international standpoint, Jameel? What's something that you're watching carefully at the moment?
What I'm watching, actually, and we'll talk about this probably for the international story, is the UK markets.
Right.
Because this is why depressed commodities market prices is such an ongoing theme and can have such a global ramifications, because the UK FTSE 100 right now, it's suffering.
When you say suffering, how do you mean suffering?
Basically, we're falling below critical psychological levels, and we're seeing selling has accelerated in recent days. I think we're down nearly 3% over the past 2 days. I think that there's risks to the UK economy with slowing growth. Depressed commodity prices are driving down mining stocks. There's also ongoing uncertainty over David Cameron, the UK Prime Minister's campaign for an EU membership reforms. And because of this, investor sentiment towards the UK economy at the moment is quite weak.
How much of that do you think is driven by investor sentiment over the reforms that he wants to see in the EU? Because the simple fact is, at the moment, that is a front and centre story from an economic perspective, but it's also from a political perspective as well. So clearly it's going to be preying on people's minds.
Sure, and this is why investor uncertainty can always have a risk on the financial markets, because economically, and you're right, the UK economy needs to stay in the EU. But basically, because David Cameron has promised reforms and he's promised to get the UK a better membership deal, he has to deliver on this. And this is why the news from yesterday, where it looks like they've made progress, there's a lot of skepticism that when David Cameron presents these ideas to follow MPs, that he might then have to go back once again and get an even better deal.
It is the proverbial cat amongst the pigeons, isn't it, I guess, from a market perspective. What about more broadly, more internationally? I know last week we mentioned China. I know you're considering the effect of potential interest rate hikes in the United States.
Yes, U.S. interest rate optimism, it's not going away right now. We expect the U.S. Federal Reserve to possibly raise interest rates again in March or April. But really what I'm looking at right now, Tim, is emerging market weakness. I'm in Malaysia last week, and there's a lot of concerns about the local currency, how it's fallen very heavily, and also because local equities, because once again, this is another economy that's very reliant on oil prices, specifically when it comes to government revenues.
Finally, this is your area of primary expertise, I suppose, Jameel. What have currencies so far this year?
We had a big surprise from the Bank of Japan last Friday. They unexpectedly eased monetary policy. I think that actually they took a trick out of the People's Bank of China's book, where they surprised the markets just before they're about to close for the weekend. Basically, this presented a short-term selling opportunity on the Japanese yen. But if you're a technical trader, you can see that the dollar yen faces very heavy resistance on its 200-day moving average on the daily time frame. We didn't manage to clear above, so this week the Japanese yen is strengthening again. The euro is steady. We believe it's still going to continue carrying on in a range between the euro dollar. However, what it really would look at right now is the British pound, because we still have expectations that the British pound is going to continue to fall.
Jameel Ahmad is Global Chief Market Analyst, VP of Corporate Development at FXTM. Back to Cyprus, I believe, and then more travelling for you. Good to talk to you.
Thank you very much for your time.